welcome everybody to the close, and what a day it is. Big sell-off here. Can't say we didn't expect it. Old industrial sector really did pull through, but more importantly, it was about the DAX. So yeah, I'm pretty tired today, I gotta say that. I was up for the US Open last night, couldn't help myself. When you've got the DAX back at these levels of support, you know there's going to be fireworks, and this area was too interesting not to really be paying attention to. So let's just quickly talk about the broader market here. Welcome everyone to the stream, and then of course we will get into everything else that's going on. It is a big sell-off. This is a fairly big deal, as I'm sure many of you are aware, and it could spark the beginning of further shorts that could even go the distance of 10%. On the S&P. Now, I guess that wouldn't be 10% anymore. It would be probably about 8%, but we are starting to get into some interesting territory. So we'll talk about all of it. Let's just quickly scroll into the 15-minute chart here and talk about the DAX and talk about what actually ended up happening there. So we got back to this zone. The previous support becomes resistance, and you'll notice that you end up getting one of the things that we like very much in these kind of areas. So you get an early kind of lightning bolt from a smaller time frame, and you get a bigger one. And this kind of sequence was pretty much occurred or pretty much happening across the other markets from the perspective of we saw weakness. So the DAX is the big deal because the DAX is kind of like another big warning sign across the world. Remember, this is another market tripping over rather than just the US market. You've got that Wyckoff distribution, you've got the max pain, and you've got the very real percentage that could go down to as low as this level, even lower at some point, back to the 2020 peaks before all of this big rally happened. I always forget how much the DAX dropped off during that time. Let's quickly measure that just to remember. That's right, 42%. So when the DAX gets going, it gets going. A few people probably not very happy with today, but the facts are that we had the weakness coming into the market, and obviously there is money to be made both. You can still be long certain stocks, you just can't be long the traditional stocks, and that's what Wall Street's been rotating into. So speaking of rotation, let's have a quick look here. What do people think about where we're going next, though? Give us your predictions in the, let's say, next 2 to 3 weeks of where the market is going. S&P 500. Give the predictions of the level that you think it's going to. All right, let's bring up the sectors that are doing well and sectors that are doing poorly right now. Here they go. So sectors that are doing well, of course, GDX, gold, mining, energy, staples. Maybe it's not doing well, staples, but overall, these are the defensive sectors that you expect it usually to be, targeting. Obviously, some of the others not doing well, jets, that's due to the Putin stuff. But we've also got everything else pretty much down here. So many sectors not doing fantastically on the day. But gold is up, and so is the materials, and clean energy is not up either. So it's quite a lot of defensives and just the things that you would expect to be doing well during this period of time. So let's talk about the S&P 500, see what everybody else thinks about ranges. So Mark Wilkins says 3,900 range, Durgesh says 4,000, makes sense. And most people are kind of predicting these areas. S&P to 380, which makes sense to the head and shoulders. So worst case scenario, yeah, you're kind of looking at the 380. You've got, of course, the left shoulder, you've got the head, you've got the right shoulder. That's the general kind of concept here. We're obviously testing out these lows that were formed really from the level of the 24th of Jan, at least from the S&P 500. But this will be the first closure into the day, unless there's some relief rally here in the next 23 minutes, which I'm not sure if there will be. It doesn't look like it. Unless there is some type of relief rally, this makes sense. Now, some other things that we need to remember. Where around is the pivot for the month? So the monthly S2 pivot sits around 39.20. Obviously, I don't think we're getting to the S3 pivot. And we've currently got a pivot sitting right on this 4,200 as well. So this is still a fairly big deal here for the market. I could see like a small amount of buying in the close here, just because it's at that level. Would I go buy it? No, not based on that. But yeah, you could see it having a little bit of problems with this zone. Nice head and shoulders. Let's now look at the smaller time frames here. Let's go the 2 hour. Okay, so that's where we opened up around that area. And let's go the 15-minute. So really, the story was the market came in, it rallied in the pre-market. It then hit this level, rejected off breaking a new high, which is something I do like to always think about. And then you got that follow through and, of course, weakness. And that just continued through the session. There was obviously that small relief that occurred throughout, and then it just sold off. So this is the real deal. I mean, this is the type of thing that you expect to form when things are looking a little bit weaker here in markets. Where's the other sector that I wanted? Let me just quickly bring up another one here, and we'll also bring up Pradeep, who very generously donated $5 here, says, where is JP? Singapore, $5. Are you talking about Jerome Powell? I assume, Pradeep. Well, he's not going to. He wants volatility, man. This is playing into JP's rule book. JP very happy with today's price action. He'd be loving it. I think that's probably what you mean here. Now, a lot of people think this probably is about the story of Russia. I think that's part of it, but not really a big bit of it. I think that you're going to go with 20% Russia to 30% Russia, and the rest of it, the 70, 80 kind of percent, will be literally the problems at hand, which is still the main story. And I think that's important. We've pretty much shown in stats that usually the war kind of stuff or any of these types of things that occur are short-lived in the market. So they can cause a little bit of instability for 10, 15 days. And then after that, the market will usually start to recover. In this case, it's a mixture. And I think it's a mixture of that bit of news and still the overlying problems. I mean, let's have a look here at the US 2-year. US 2-year back at the peaks throughout today's session. Probably was a bit of a warning sign that maybe you should have been considering the short kind of zone. The 10-year as well, 1.98, moved up heavily from 1.84 back into some big resistance up here. So yeah, quite a big problem there from the point. Monica, thank you very much. 750 in the chat. Welcome and like, please. Appreciate everybody that is joining us here for the close. We'll keep going through all these markets. So yeah, US 10-year again spiking. Have a quick look at that on the daily. You can see it's made a big turnaround in the last 2 days. And really with this, what you're mostly looking for is just whether you have some kind of yield curve inversion as well. And they fixed that candle up. Anyone that had this chart on would have known that there was a false bit of news, a false bit of information that came out that had like a fake spike on it in the previous couple of hours. But we're not at yield curve inversion yet. So again, one of the big signs of crashes in the market is this. Another sign is obviously we're looking for the mortgage debt. And there are other reasons why I don't think this correction at this point, still between the 10 and 20%, is still called a correction. I might use crash on YouTube because it's the only effective thing to use. But really, this is still a correction, and you don't really enter bear market territory until 20%. You've got to be able to cut through them and say, is this the beginning of something really bad that's going to continue to go 40, 50%? Like a proper crash will, or is this just part of a correction that then you should be buying the dip? And I think that's a discussion that everyone's going to be having, and you just need to figure out whether you believe it is or not, and whether you're prepared to go with the stats and go with the general concept, or whether you're going to be very confident that, yes, this is a fully fledged crash or something like that. Gary Sutton, he says, Tom, Dow and XLI on the Wyckoff also 2-3 weeks from now. I see 3,900, 3,850. Not sure the 38.15 fib is going to get hit. Yeah, you don't go for the exact price. Absolutely not. You look for a zone. So that's another thing with the S&P. If you're expecting it to come down, I don't think that you should be sitting there going, oh, I think it's going to go to 3,800, trying to scalp that market in. You'd be basically drawing up a box within a zone and looking for turnaround stories there. Remember, this is going to get us, if we close down here through the weekly 50 exponential, that is a big moving average that usually means trouble is on the horizon for a fast dip. You've got the death cross that people talk about all the time. Maybe I'll put it in today's video because it sounds cool. Now, these kind of things, the death cross, let's say, are not actually very good indicators. And in fact, I wouldn't even bother with the death cross usually. But people like death crosses like this one here because they think that it means something and it's going to continue on. I mean, you've seen death crosses occur in the past and the market goes bullish. And over here, you've got a death cross. And this is probably the most likely kind of similar scenario. And you get that quick, sharp sell-off. The quick, sharp sell-off. That's kind of where we could be right now. The quick, sharp sell-off, which will be brutal. And then potentially start reversing as the market makes sense of it. Remember, the algos have control of this market right now, everyone. So, yeah. Anyway, that's just some of my thoughts here on the market. I don't know what you guys think. Hopefully it makes some sense. Let's have a look at XLI. So XLI is the industrial sector. Yes, I very much was looking at this. This was actually brought up by someone in the private mentoring group. I wasn't looking at XLI enough. And they brought this one up and said, Tom, what do you think of that? And I said, well, that looks crap. And that leads into our discussion here of weakness in the market. So it was a very nice pickup. And certainly, a great kind of turnaround. And remember, traditionally today, you would think that US oil should be flying high and it all looks good, but it's only sitting at 91.76. So actually, a lot of these, markets are showing that it's minerals and materials are doing okay, but this whole area is now turning around. I mean, this is a sector that was holding up amazingly well. Another sector that's been holding up amazingly well is Moo. So you've got to go look at the agribusiness. Has that started dropping? Well, this is the first couple of days where that's taken a dive as well. So this is now becoming everything's coming with it, more so than the others. Hero says, Death Cross sounds like a Street Fighter move. Well, it could be. It's not a very good one. Web B says, oh my God, need to hear words from a sound mind. Yeah, I'm surprised. Again, I find it interesting. Like I was up early in the morning looking at the Twitters and people were buying, Tesla with they were going crazy. They were like at 800 and just have people stopped looking at price action or are they just hoping him? I don't even know. I don't come into a candle like this and a trend line break and think, oh, what a great day it is to buy 800. And this is the problem. I think that here, this is a really big deal for Tesla. And why I say that is it's not like necessarily, you can't get back on your investment or anything, but look at the price action. It rejected this zone a lot. It's one of the stocks that you would think, because of its earnings being very small at this stage compared to its valuation, that it would be getting hit. It has the most slack demand from any retail trading stock, similar to Nvidia, very heavily bought up. But then people today were talking about it going back to $1,200 in the next week. I'm not so sure about that. So here's the 800. Obviously, you get that initial bounce, which is fine. But in today's session, let's have a look at what happened actually for today's session. It just came down and was hitting this level, and it basically went once, twice, and then obviously this is the session itself. So we get here the 23rd, and it came straight in and just kept eating the lines. So it tried to bounce very weakly. There wasn't even a bullish candle here. Not even on the 15-minute. There was no bullish candle. Nothing was showing strength. And then it got through, tested from the bottom up, and it was all over. So now that we're sitting at 761 for Tesla, another problem with this is 761 even a level? I mean, you might be able to say, oh, well, it's previous resistance over here. Yeah, fair enough. But I think the thing with Tesla is it does tend to like to go towards those gravity zones, which are going to be 700. And this is going to be opening up the tap here. We saw a very brutal sell-off occur over here. And I feel like because we're down through our trend line of 2020 to 2022, that this could be going much lower. So I'd like to ask the chat right now, what is your support here for Tesla? People are already putting it in. Let's see. You can totally disagree with me and say, Tom, I think Tesla to 1,000 within the next 2 days. That's fine. But let's see what everybody thinks here. Thomas Otto says Tesla a buy at 700. Good support. That's certainly a zone of interest. Many people have purchased this before. I think you're going to have to probably practice the concept of scaling a little bit here, because the market, you're going to be trying to pick it up when maybe the S&P 500. Remember, check the index. If you watch this channel, there's 1,000 of you right now here. Thank you very much for joining us. Smash that subscribe button, guys, and the like if you can. But yeah, if you're thinking about what do you do? What am I going to do in the future when bad things happen, when the VIX goes bad, when the VIX is huge? Just go back over to the US 500. When the US 500 hits a support and your stock's hitting a support at the same time, it's a better chance that you're correct on that pickup. So remember, you don't need to freak out. You just go and watch the big indices at this period. And then when they hit key levels, you trade accordingly. All right? You trade accordingly. It's much better. Gary Sony says, mastering price action takes years and people don't want years. That is true. They want millions in 20 minutes. Unfortunately, that's the 2020, 2021 attitude. But that's because everyone was a pro in a bull market. Okay? When you've got this big buy the dip, 400% in one day out of space stocks that make no sense, everyone's a pro. But that's okay. Like, I mean, a lot of people have gotten into trading and investing. Unfortunately, they're going to be losing money here. But guess what? When did I get into investing and trading? The GFC. Why? Volatility. Did that mean I was good straight away? No. Why did I get hooked in this type of thing? I made too much money in about 30 seconds. So it all begins the same way. It's just whether you stick with it and learn, and whether you're prepared to be patient. A veteran kind of person that's been sitting here for a long time trading or investing, the key word is pretty much, well, your psychology, but also just patience, just being able to make sure that you don't overtrade. And that means sitting there for 90. I think someone in the public chat said this last night. It's 90% waiting and 10% trading. And I agree with them. You have to just sit there and wait and wait and wait and wait and wait and then strike like a tiger. Bernd Roskin brings up a great point, and I totally agree. There was no news last month. Tesla needs constant novel stuff. So yes, if they had the truck, that would be helpful. If they had positive catalysts, it is helpful for the stock. In fact, there are some weeks where there is constantly information coming out for Tesla. But I feel like a lot of the news this year is going to be just reconfirmations of the Model Y getting an upgrade, this and that, getting small upgrades, incremental stuff. So it might be a big year for Tesla on the car front, but they are going to need big announcements to turn the ship as well. And that creates catalysts for hype. And if you have a massive retail army trading it, it does help. Darren Jones, $10. Thank you very much, Darren. Tom, it did both. It gapped up overnight and now sold off to 330. There you go, Darren. So you got both right then, man. That's good. Thank you very much for the donations as always. And I'm hoping you were able to potentially take advantage of some of the things that we were seeing there as well. That's very good. So people thinking Tesla going to pretty much a lot of 550s, 500s, 700s. So 550 would put us back into the lows. That would be very consistent with the growth stock probably getting mauled during a big pullback. Tesla will move faster than others now that it's through these zones. We already see today 6.73% down, so it can move very, very quickly. Thank you again, Darren, and everyone for the donations. Skunkworks, Canadian, $10. Thank you very much. What are the top signals you'll be watching for the bottom in the indices, QQQ, SPY, etc.? Yeah, so some of the things I'll be looking for is I'll be looking for a huge amount of puts to enter the market. So you'll want to see just mega puts loaded, and I mean mega puts, similar to on the 24th, okay? Another thing that I'll be looking at, so I'll go through each one of these now. Thank you very much for the donation. I will also be looking, where are we here? Do I not have it up anymore? 1 second. I'll just grab that on. I'll also be looking for this, which is just the percentage of companies over or under the 50 moving average. Now, I traditionally wouldn't mind to see these kind of lows. So you'll notice over here, the March period, obviously the December big sell-off that occurred there, and the October one. If we can get enough companies underneath the 50 moving average, e.g. it goes into like a 10 or something, that would also be a pretty good sign for me. Code SP500 here for this if you need it on your trading view. So that's another thing that I'll be looking for. Now, if we're talking about price action, before price action, I'd also like to see interest rates probably top out. So that is the 2-year and the 10-year actually to break trend to the downside. That would be ideal. So here we have the current big trend. You can see the daily 20 moving average is holding up this. I wouldn't mind to see that also turn and get underneath the daily 220. It might be able to do it at the same time. And then we also want the price action. So let's just talk about the price action. We're going to be able to put in some prices, e.g. something like the 4,000 or the 3,800. And at that level, we'll be looking for small lightning bolts, double bottom bases. Not that I think we'll get a Wyckoff because it won't sit around long enough, but some kind of Wyckoff base. These are all good signs. Double buys, something similar to over here. If that formed down here, it'd be fantastic. All of those types of things. And this will be the signals that we're getting. The other thing, but mostly it's going to come down to a mixture of options, a mixture of everything being oversold. So therefore the fear being at a maximum. They're good ways of really telling the fear is at a maximum. And that probably realistically retail is around 70 to 80% short as well. When everybody is fearful, I will be looking at it. I was surprised how many people were bullish today just because they'd seen the previous support over here and they were wanting to buy it up. The candles don't lie, or they shouldn't anyway. And right now, the SP 500 has a hideous tweezer that is selling it off. And that's rare. It is rare. So thank you very much, Skunkworks. Hopefully that helps answer some of your question. People on Facebook will certainly be doing that very soon, but I do appreciate your donation very much. I hope we didn't just lose the stream. Welcome to the almost 1,200 people we have here. Yes, we've got a sell-off into the close, putting pressure on the low. So this market is continuing to churn out fear, continuing to really put pressure there. Now, let's go through the broad market. I've obviously done Tesla a little bit. Let's have a look at some of the things that are starting to turn over. So firstly, the Apple. Now, we haven't seen Apple go down for quite a few days. It's only down 2.59%, but this is one of the kahunas of the stock market. Watch it around here at the 155. If it does breach that, another sign that we're probably in the doldrums, because the next stop for Apple could be a 140. I'm not really loving Apple. I don't like its price. I don't like a lot of things about it right now. We've got Microsoft also turning over. One of the better stocks in the market is old Microsoft, the highest moat in the market. I would say it's the only company that's untouchable. So it's untouchable, guys. from the perspective of every year, you're going to think about two things. Office 365, they just up the price by $1. It's not Netflix. Where are the businesses going to go? Every year you get some kind of growth. You could pretty much do that for a long time because no one will really leave that. The other thing is you've got to think about games as a service. So that's really what they're doing. Microsoft's are the king. They are the best at one thing, and that is licensing it up. And that's a Bill Gates special, isn't it? So that's what they're doing to the gaming world as well. So I expect that to be a big growth curve for them in the future. Once they start getting their games into their Xbox Gold, whatever you want to call it, or Gold Live, Microsoft Store thing, effectively games as a service will be a whole new thing. And I would say even I will have games as a service over here. Does anyone have the Xbox yearly subscription? We've seen it work well for PlayStation and Xbox on the consoles, but Microsoft might be able to take it to a whole nother level, which I think is going to be a big deal here. So Microsoft's showing some weakness there. And whoa, Mitchell Miller, $40. Thank you very much, Mitchell Miller. Can we give some claps in the chat for Mitchell? Thank you, man. Always been a big supporter here. Tom, with the SPX close under 4,300, why shouldn't I load up on SPY puts? Because they're expensive. Trying to talk myself into waiting and playing the recovery. Don't give me the financial advice, but tell me what to do. Yeah, well, I can't do that, but I do appreciate your donation, sir. The main reason you can't load puts most of the time is got to be just the cost of loading the puts. So, when you really want to load puts, you generally want to load puts with your conviction on the rips, which is what you're saying there. So is there going to be a rip? Well, there always will be because it's volatile times. I could see it selling off another day, but the problem you're going to have here is just it's so expensive, man. Oh, if you're going to add puts, the only way really to do it is by spreading it off, which is like a buy put and then obviously selling off the bottom. And the reason is you've got to get rid of some of that volatility. But even when it comes through, you're going to then need timing on your side. So, yeah, look, put game is all about selling it on the rips. So if you were feeling the put action, you really should have been here selling it off. This was probably the best stage when you had that double top rejection. Even this morning, if you were there in the session open, you're feeling bearish, it gets back into that 14.1 area. Obviously I had this already drawn up. Talked about it on Twitter. Come follow us on Twitter, FX Evolution. Come and join us over. So this was a zone that I was interested in, and we did get there, and then that's where we reversed. That's the kind of area that you want to load the puts. So I think if your conviction is strong now towards the short and it doesn't go off into a massive run, you have really two choices, and that is, I think the best choice is in some ways if you have to be in, then you trigger a portion. Like effectively you scale in, you trigger a portion. This is not advice, it's just a concept, educational concept. You trigger a portion of your puts. And then if it rips, if you're still convinced because of everything you've seen so far, then you add and you scale an extra put position, just like Big Wall Street does. That's what they do. Why do they create rips? To sell to the plebs, which is us. They say, oh, here you go, retail. Have this in the first hour. Would you like this? Oh, fantastic. Look at the fake market futures. So fantastic. Such a great time for you to be in the market, guys. And then they go, no. That's pretty much their main game. So, Mitchell, that would be what I would probably be conceptualizing. If you're wanting to, yeah. Once it happens, because of the speed of markets, it's not the best time. You have to be able to preempt it. And the key here was the DAX, man. There was no way that this was the only reason I was up and I've had 4 hours of sleep. Okay. Why have I had 4 hours of sleep? Because the DAX was at the roll reversal. It's a rip into a very big potential sell-off. So in the future, that's what you're really looking at here. Thank you very much for the donation. Appreciate that. And so does the community. Gareth Evans says it's like fresh meat. Yeah, that's right. And Josh Lynn says too late for puts and short. Certainly, It's not late from the confirmation, but it's late from, yeah, the early kind of cheap entry of puts. Puts are very expensive. All right, let's keep going through some other things here. So what else have we got? Most things are down. What I want to look at though was the old Nvidia, because Nvidia to me is opening itself to $200. Now this is why I was very short on the market as well. Another stock showing big rejections here. Weakness period for Nvidia, the puny div coming up. Not that that means anything, but someone did comment on it. And we ended up getting that follow through. So let's have a look at the 15-minute chart here. These were fantastic shorts early in the morning. Again, you get a test here. You get a breach with a false break. It goes down. I was pretty confident at that stage we're going to breach this low. That is obviously the big wick that's coming off the weekly. So the continuation occurs. And we're sitting here now at a 223. Obviously, the market's closed and it's sitting a little bit higher after hours, not much. But this opens up 200. So give us your NVIDIA goals here. Where does everybody have NVIDIA sitting over the next couple of weeks? Do you have 200-ish range? Makes some sense, I think, based on our trend line going back to 2020, 2020, 2021, 2021. What do we think? Is this a question mark? Does this make sense? Remember, we've got industrials also coming through. It's all pointing in that direction. Well, people have got a lot lower. Fair enough. Yeah, that would be fair. Kevin N says the market is expecting full-on conflict. Sure. But even if the market is, I don't think it's going to do that much. Light, most people going with 150, 190, 179. Nvidia head and shoulders. Oh, yeah. Don't look for patterns in patterns, would be what I'd say there. I see what you're saying. Here, here, here. Look, novice mistake. Everyone looks for patterns everywhere. Better mistake to make, read the price action. Yeah, if you do always look for patterns, then you tend to believe in this concept of the pattern always working out and that being your target. I think it's very important to understand that you're always generally going to see head and shoulders at the end of these trends, or at least double tops or whatever. This is not really a proper head and shoulders. The right shoulder is too high. If you've done our ultimate masterclass, which I believe is going to be potentially on sale this week, so definitely check it out. Then you would know, yeah, you don't want the right shoulder bigger than the left shoulder. I assume that's what you're talking about. So yeah, a lot of people see a lot of patterns. It's not really the right way to go with things. Bernd Roskin, thank you very much. Bernd, $10. Thank you. Thank you for your good work. I appreciate you very much. Thank you for your generous donation to the channel. Very good. Thank you. And then we've got the big man, Ulrich, DKK, $100. All aboard the short bus. Now, I'll let you know. Sneaky Ulrich in the public Discord even last night. He's one of our admins. He was having a little bit of a short on the old NVIDIA, and I think he's had it there for a while. So he says here, keep those semi-shorts printing. Yeah, he's doing pretty well. Got to say, Ulrich is doing good. He's spotting the things in the market. I would call him very similar style to me. I don't know where he picked it up from, but he's doing well. So thank you very much, Ulrich. Appreciate that. DKK 100. Continue those shorts. And again, Bernd, thank you. And thank you also to everybody else that's been donating. Always appreciate you all, Mitchell Miller and Darren and everybody else above. Thank you very much. Semi-shorts going printing brewer. Yeah, probably the most over-purchased sector. I mean, if you look at semiconductors, it is the loved sector, but it's also the one that acts very badly to the shorts. We've got the trend line coming up here soon for this as well. If that gets breached, remember, here's our little trend line. If that gets breached, next stop on this level could be around that 224. Now, you got to think about semiconductors as how they react to this type of news. So this is back in 18 and what ended up happening. Remember, the sell-off was relatively severe. We ended up getting a 26% sell-off. This time around, we have a lot more bubble in this sector. So I could really see it around this percentage quite easily, a 30% pullback in, well, not even arguably, one of the best sectors in the market for quite some time. Kevin says, be careful, everybody. The whole market is basing itself off news in the Ukraine. I think that's more of a catalyst than anything else. More of a catalyst. So some people ask for Facebook. Let's have a quick look at Facebook here. Where are we? There it is, 198. Buy the dip isn't working on this one. This devilish company. You know, I don't see much positivity in face. Who's the other company? Microsoft's got a metaverse now, doesn't it? Or it's going to. I don't know. I'm not convinced by Facebook. I think Zuckerberg's stuffed. I'm not buying this. I may trade, but I'm certainly not buying it. I'm done. I like, well, I don't have it anyway, but I guess I would in the Nasdaq. But this is just a massive falling knife. It's not good pickup here, everyone. The reason why is because if you keep picking up these, you're probably starting to get the idea now that when things go bad, sometimes they don't just dip by. 2020 and 2021 was sell off into earnings. Woohoo, we're back next week. Okay, it's not that easy anymore. And buying these types of things will drain your accounts. So what you're better off doing instead is waiting for, some pattern, some reversal signal that shows strength, and then taking that reversal signal cheese up. And there may be an opportunity on Facebook eventually, but I'm still not seeing it. I don't have enough here. And I don't know if you do, but I certainly don't. I don't even know where it's going next. I mean, is it 175? Is it here? I have no idea. I'd be again going over the right hand side of my screen, looking at the SP500 and saying, okay, is that on support? If it is, there's a good chance that Facebook will bounce with the support, being a huge portion of obviously that level. Snoozer says Facebook got replaced by TikTok. 100% agree. Gary Saini, Facebook is a dead company from the perspective of they have made the mistake that Coke and McDonald's don't look. They'd never make this mistake. McDonald's, Happy Meal. Children, come inside. We've got some Grimace, some Mayor McCheese, little figurines of your favorite Pokemons or whatever. That's how they do it. They continue to reinvest in getting us when we're young. How many of you know the Nike swoosh, the Under Armour now, probably the Coca-Cola and the McDonald's when you're like 5 years old? You almost, maybe not the Under Armour, but you certainly know those other three brands, yeah? They're very good at replacing their young or their people with younger people and continuing to remain relevant. Just like Apple remains relevant, Google remains relevant. Facebook is struggling to do that. Mohammed Al-Masari, AED, $25. Thank you very much. Hey, Tom, I know you've been watching Palladium. Yes. Would you say it's ready? Also, in terms of risk management, do you limit your trades per day, week? Yes, you probably should. In terms of basketing trades, you really should never have more than 5 open. They become hard to manage. You don't really need more than 5 open. And then that also helps you limit your risk. So when you start getting into that territory of 10 separate trades open, it can be very tough to manage. Pick the best ones and then go with that. It's kind of like fundamentals. Do you need to buy the basket? If you do, buy the whole basket. Or don't just go buy 5 stocks in that sector. Just buy either the whole basket or as in one ETF and just go with the sector, or you pick the specific stock. And of course, Buffett has been well known to not have a diversified portfolio. He has very small amount of holdings that are very concentrated. All right, let's have a look here at Palladium for you. And we'll look at gold and everything else. So Palladium is the story of pretty much this war situation stuff, or whatever you want to call it, conflict. Probably got demonetized by YouTube. Thank you very much. And here is the breakout. So yes, it is a breakout. The main problem with this trade, or any of these trades to do with this conflict, is that they are based on the news continuing to escalate. So from a price action standpoint, let's just quickly look at it. Weekly, Double rejection candle, yes. Breakout, yes. Certainly is doing it. 2 hour, it's through. Series of higher lows, absolutely fantastic. Check. Good kind of thing to follow it up by as well. This beautiful series of higher lows that have come through. You've got some nice levels for potential stop losses if you want to enter this, and you're really just scaling in. So you're basically saying, okay, maybe I like it for the bull run here. I'm going to go for the next distance, etc., etc. These types of ones, though, just remember they are news-based trades, but the breakout's happening, no doubt. And there are some very good cases to be saying, all right, we've got some fairly serious runs on it to 2,600 and then possibly even into that 2,800 to 3,000 level, similar to back over here. So Mohammed, yeah, I do limit things, and that is a good one. We got Zid, Canadian, $20 with a picture of a van. Thank you very much. I've never seen a Tesla van like that. Investment Q. Question: Tesla grew EPS 64 cents to $4.90 and conservatively will grow $12 in 2022 and $20 in 23. Fair enough. At 760, it's a 60 forward PE rating. Okay. In 1 year, 760 would be 35 forward PE rating. In time, it seems downside protected. No, price will have to catch up to fund. Yeah. So you're looking at the fundamental side and thinking ahead in the earnings. Now, the market is also thinking that. So the market's probably predicting those kind of things. What's happening is Tesla has to live up to expectations now. So the time in the sun of being able to say, okay, we have very little earnings and we're 1,000 PE is obviously over. So now the market will slightly underprice itself to the forward earnings. And I think what's going to happen is if you are correct, let's say, and those all play out, you most likely will have the turnaround story that you want. It must live up to expectations, though. Every earnings is super important. And it's not just, oh, we're doing this in terms of scale. It is, we are making money. It's time now in Tesla's growth that they must make money. And they've also got to decouple themselves from making money off the government kind of incentives. So will that protect price on the downside? No, because the markets can be sometimes inefficient during periods of peak algo trade. So you'll find that the market may underquote itself more than you think on Tesla as it's attacking. Potentially it's going down. The rest of the market's going down. Maybe it's attacking retail, buy calls a lot or something. It will overextend itself. And it's your job as a technical analyst and fundamental person and investor to recognize that gross imbalance. So that's what I would say, Zid. ND says, I love how fickle bulls are. Well, I've still got the bullish sentiment here. I'm not bearish. I'm not scared. I'm bearish for like maybe, a week or two. But I've maintained the same concept. When you enter these corrective periods, especially with the current stuff we're seeing, and I'll do it again in today's video and we'll talk about it. There's a huge, level where you have to kind of cut out the fear and look at things on the plate and say, am I scared for the medium to long term? All right. Or am I scared for just the short term? And I guess here would be the example of maybe you're scared of the short term. Not so much on Tesla overall, but it's the US 500. Koa says FX evolution is a good idea to leave your previous technical markups on your chart to see if your analysis is correct. Yeah, but I would probably suggest that you take screenshots as well. But yeah, that would be very fair to leave markups on there. I'd probably take screenshots and then look at them because otherwise you might have huge amounts of markups that will confuse you to the current day. But yeah, I would say yes. If you have analysis on the charts, it would be a good way of doing this. Gary Sony says, I love how much denial and anger that's in the markets right now. Yes, unfortunately. Means we are not near the bottom if you use the fundamental D DABDA test. There we go. This is a good point. ND says use TradingView IDs. Yeah, I'm a little bit old school, man. I might use TradingView, but I've been around for a while, so I tend to take Snaggets and stuff. But I think that's correct. You could just publish your own ideas up here, take snapshots, publish, put them in your private holding. Good point. Yeah, I agree with that. So very nice. Diego says going long today. So yes, probably the futures market you would think it will probably recoup a little bit here. So what's the most logical conclusion for the futures market over the next kind of little bit? It's to most likely do a little bit of the dance like this. We've got that 13,750. We're obviously trading at 13,500. It's a good kind of case scenario for us to get back up to 13,750. And then, maybe that to be where a sell-off is. Just, the standard dance of rip, rally, whatever, all that type of stuff. Rip, rally, sell, etc., etc., etc. I'll put a video out later on talking about it. IWM also pointing towards the signs of weakness. As we said, it's another market that is lagging. So here's the first move. Here's the second move. Here's the third move. Somebody else gave me another one that was doing this. Was it Tesla? No. Damn, I don't remember which stock it was. It was a good one. There was legs on the way down. Gold at the resistance here, looking to break out 1910. So maybe a trade for some people later on. 1910 could breach and then move up. I'm wary of all of these trades because they are going to spike off news. Just be careful there. I mean, obviously, this is where the heavy buying has been in the past. That's where the safer kind of stops are. But yeah, gold looking towards this breach. You can see here the current candle. If we get the follow through, could be a little bit of a pump here in gold in the Asian session as everybody gets into, some of the best trading session for gold is sometimes the Asian session, the really big, powerful buying that comes in due to fear in the physical market can lead over into that point. So there's no real stock that I think is worthwhile considering or saying, oh, this stock is telling us anything. At this point, it's all about the sectors, all about the indices, and then you just pick the stock that you believe is going to be the better investment or better trade for you once you hit those supports. And again, I'll keep reiterating that so people get that through their mind. It keeps it simpler and you won't freak out as much when you do this. Let's move over to the crypto side. We'll quickly look at Bitcoin. Bitcoin down to 37.7. It's down less than you would think, considering where the Nasdaq is, which is good news. But you look at this daily, again, it's a rejection. If this closes like it is right now, watch out for the low here, because that's going to put pressure on the downside. And I'm not sure how to feel about Bitcoin right now. The FUD is severe. People are really starting to, I'm talking bigger fund managers are really starting to put their claws in on this one and slamming it. And it kind of makes sense that we're in a deeper pullback like the pullback of 18. It's a very similar scenario. The crypto winter, people called it. Why? Rising interest rates. I don't think that's what happened in 18, and Bitcoin didn't do well into it. It tends to trade like a growth asset more than anything else. So that's a big problem for it. If we get through 30,000, obviously that's going to doom it for a while, and you would think that the real sentiment gets through underneath here. So be careful there at this one. And it really is the story of Bitcoin more than the story of any other crypto. Some other cryptos might move up and down and things, but as you know, whatever this does, the rest of the market will do. It's the sentiment indicator. And right now, sentiment is in line with the S&P. It's weakening. And there are some, I might be able to get one of the charts. I saw some guy on Twitter. He had a cool chart. Can't remember what he was doing, but he had a cool chart. And it was basically just superimposed all the previous big booms. And then, of course, it superimposed the busts. And one thing that was interesting is I think we're at 10 months or something like that from the high, or from what he called the high, which was similar to the last one. And yeah, where he was kind of conceptualizing we were in the crypto winter was around here. Something like that in terms of his thought process of the boom into the bust. So this was where he was here. So if that is true, then of course, if you get through the supports, just like over here, what happens is it gets absolutely brutalized. So if you want to think about what that time was November, and it's a big sell-off. Right now, we've got a big sell-off. So 30,000, don't want to scare anyone, but the price action is still negative towards this. And every rally, if it's going to be real, what you want now, more than anything else, is to bull past this and close. And then you can say, suck that, Tom. We're going long for a little bit here, at least to the 42K. So yeah, watch these candles, be fast and be quick. Sprocket says the altcoins that are pumping now makes me worried for this whole space. I'm not even sure which altcoins are pumping. Let me have a look at Coin Market Cap. All right, let's see all the fantastic things that are pumping. We've got Luna, so an NFT. Sol, slightly up here. SHIB, not ever good to see going. Even if you love SHIB, you've got to understand that if SHIB's going or Doge is going, either of these, they actually end up creating a fair bit of instability in the market. Because it's kind of like these coins often do have those kind of parameters around them. Even if you love them, yeah, do know it's kind of like AMC GME to a degree. And then the rest of the alts just doing whatever they're doing. Okay. All right. So that's our thoughts on Bitcoin here. Don't freak out, everybody. It's over 1,100 of you here right now. We do appreciate it. And I think the markets, while they are looking weak, remember the opportunity here could be really significant if you're able to flick the switch in your mind and say, okay, I'm looking for that turnaround story. I'm going for the medium to long term. And even if you're trading, look in the mornings, look at the rip rallies and then the signs for sell-offs. I mean, there was a nasty one that happened on the NAS. You saw the S&P, which was the cleaner signal, but even the NAS, like when I was watching it this morning, it was pretty nasty for people that were going bullish, because what ended up happening was this. People had like probably this line sitting here in the morning and they're looking at it going, yes, okay, cool, high, low, high, low, high, low. And it comes down and it instantly creates a big bullish candle in terms of a big bullish buy week. And then it never follows through past the 14,040 and then instantly sells off and crushes that purchase. And then, of course, creates this candle here. So these together really start to point towards, okay, cool, it's time to short. And then since that point, it was just absolute bedlam on the markets. They obviously flogged it all the way down. John Hurd says Nasdaq. Yep. Well, we've got it up here. Got to get some interaction, tease trade. Okay, everyone. Well, have a good day. We'll make a video a little bit later. Remember, subscribe, smash that like button if you enjoy the videos. And yeah, there's plenty of opportunity around the corner for shorters. It's hard to believe that any rally here won't be met by some form of short demand. And that's just because we've continued to see this follow through action here on many big stocks that have been showing weakness, e.g. Nvidia, e.g. Apple, Microsoft, big stocks turning around. And the smaller stocks, I mean, look at this. Wow. I mean, Square is trading at $88. So this is worth $51 billion. I'll leave you with this. How much they pay for in American dollars for Afterpay? It was $28 billion, yeah? I don't know what. Dorsey's mad. Between Tidal and Afterpay, he basically destroyed this company in over purchases. Wow. Maybe he'll prove us wrong, but God, that's bad. 51 bill. And then you think about what he purchased up here and how much he paid for it. It's now starting to look like a huge portion of the company. So yeah, that is bad. I always look at that and I go, oh, terrible, terrible, terrible. And Gary says, hypers are seeing their ultra hyper speed version of the .com bust. Well, this is actually worse now than some of the .com bust stocks, except for most of those ones. A lot of them went bust. completely. I mean, SE is down top to bottom 62%. DKNG, this is clearly finding support, by the way. It's an interesting one. So DKNG is up today. And if you notice, I think it's kind of bottoming here. We don't know yet, but it's certainly one that we're going to watch. But this is down huge. Every one of them. I mean, TDOC can't catch a break. Stock's trading at 61. To put that in perspective, 61 puts it back into 2018 and all of 2019. All right. Catch everybody. Bye for now. And of course, have a good day. And try not to freak out too much. Always have a plan. And if you lost money, well, I feel bad for you. But unfortunately, in this market, it's not easy. And it's not nice. And it's a little bit nasty. Catch you for now.